Hi everyone, welcome back. Now let's start by solving end of chapter question number 6. A Limited purchased an asset of rupees 100 lakhs on 1st of April 2020. It has a useful life of 4 years with no residual value. The recoverable amount of the asset is as follows. They've given us the recoverable amount on 3 different balance sheet dates. We purchased the asset on 1st of April 2020. They gave us the recoverable amounts on 31st of March 21, 31st of March 22 and 31st of March 2023 as rupees 60 lakh, 40 lakh and 28 lakh. Probably what they're actually going to ask us to do is calculate the impairment loss on each of the respective dates. All right, we have not been given the carrying amount, but we've been given the cost and the useful life. So we are actually going to calculate the carrying amount, compare the carrying amount and the recoverable amount to determine the impairment loss on each particular date. Calculate the amount of impairment loss or its reversal, if any, on 31st of March 2021, 31st of March 22, and 31st of March 2023. Now, before we start solving the question, let's actually talk about reversal of impairment loss. Now, we generally charge impairment loss when the recoverable amount is below the carrying amount. All right, we charge impairment loss when the recoverable amount is below the carrying amount. What Ind AS 36 states is, let us say today the recoverable amount is below the carrying amount and therefore you have charged impairment loss. But on a subsequent balance sheet date, if let us say on the same asset on a subsequent balance sheet date, the recoverable amount is higher than the carrying amount. The recoverable amount is greater than the carrying amount on a subsequent balance sheet date for the same asset, then it is said to be a case of impairment loss reversal, because you recognize an impairment loss at year 1 on a subsequent balance sheet date, let's say year 2, you actually have a case where the recoverable amount is greater than the carrying amount, and that is a case of reversal of impairment loss, because the impairment loss that you charged on an earlier date is now actually getting reversed because the recoverable amount is greater than the carrying amount. All right, generally speaking, when recoverable amount is greater than carrying amount, we do not do anything. We do not recognize any impairment loss, right? That is what we have been seeing all through, right? When recoverable amount is greater than carrying amount, then we don't do anything on the balance sheet or the income statement. But in this case, the recoverable amount is greater than the carrying amount on an asset on which impairment loss has already been recognized in the past. Impairment loss was recognized in the past, and on the same asset, recoverable amount is greater than carrying amount. This is a case of reversal of impairment loss, which Ind AS 36 permits us to recognize. If impairment loss is an expense, then impairment loss reversal is basically a gain. Impairment loss is an expense, impairment loss reversal is going to be a gain. Ind AS 36 permits the recognition of gain. How is it calculated and all? We'll actually see through question number 6. All right, so let's start by solving it. Okay, we'll now actually start by calculating the carrying amount on 31st of March 2021. I know the cost of asset on 2021st April. I will start by calculating the carrying amount on 31st of March 2021. So my step 1 would be calculation of carrying amount on 31st of March 2021. We start with the cost of asset on 1st of April 2020. The cost of asset on 1st April 2020 was rupees 100 lakhs. We then recognize depreciation for the year 2021. All right, we are going to calculate the depreciation from 1st of April 2020 up to 31st of March 2021. All right, so we're going to calculate depreciation for 1 year. The amount of depreciation is going to be calculated as cost less salvage value divided by useful life. Cost less salvage value or residual value, the whole divided by useful life. In our case, the cost is equal to rupees 100 lakhs, salvage value was equal to 0, the whole divided by useful life of 4 years. So this is going to be rupees 25 lakhs. All right, because there is no salvage value, I can do directly cost divided by useful life, and the carrying amount is going to be equal to rupees 75 lakhs. So the carrying amount of the asset on 31st of March 2021 is equal to rupees 75 lakhs. Now, to calculate the impairment loss for on 31st of March 21, what I would do is I would compare the carrying amount with the recoverable amount. The recoverable amount is given in the question as rupees 60 lakhs. On 31st of March 21, recoverable amount is given as 60 lakhs. Therefore, impairment loss will be calculated by comparing the carrying amount of 75 with the recoverable amount of 60 lakhs. So, calculation of impairment loss on 31st of March 2021. So impairment loss would be equal to carrying amount less recoverable amount. This would be 75 lakhs less 60 lakhs, which is equal to rupees 15 lakhs. All right, so this asset was appearing in my books at 75 lakhs. I've brought it down to 60 lakhs by recognizing an impairment loss of 15 lakhs. Since the carrying amount is greater than the recoverable amount, we are actually having an impairment loss that is being recognized. This impairment loss will be recognized in the P&L account. All right. Now, after recognizing the impairment loss, the revised carrying amount will actually be equal to original carrying amount less impairment loss. All right. So I'm moving on to step 3 of calculating revised carrying amount on 31st of March 2021. On 31st of March 21, the revised carrying amount will be the original carrying amount less the impairment loss recognized. Revised carrying amount will be original carrying amount less impairment loss that has been recognized. Original carrying amount was rupees 75 lakhs. The amount of the carrying amount before recognizing impairment loss was equal to rupees 75 lakhs. Now after recognizing it, it's 75 lakhs less rupees 15 lakhs, that is equal to rupees 60 lakhs. So the revised carrying amount after impairment loss recognition on 31st of March 2021 is equal to 60 lakh rupees. So when I prepare the balance sheet finally on 31st of March 21, the asset is going to appear at 60 lakh rupees. Now let's calculate in step number 4. Let's now move by 1 year. All right, we're done with the calculation of impairment loss on this date. Now let's move on to the second date, which is 31st of March 2022. For calculating the impairment loss on 31st of March 22, I first need the carrying amount on 31st of March 22. I have the carrying amount on 31st of March 2021, but I need the carrying amount on 31st of March 2022 so that I can compare that carrying amount with the recoverable amount given in the question. All right, so step number 4 will be carrying amount on 31st of March 2022. For calculating the carrying amount on 31st March 22, we start with the carrying amount on 31st of March 2021. Alright, we'll start with the carrying amount on 31st of March 2021, which is after impairment loss. Alright, obviously the amount that you need to take is the after impairment loss amount because this is the final carrying amount. So the after impairment loss, the carrying amount is equal to 60 lakh rupees. Now we are going to charge depreciation for 1 year from 1st April 21 to 31st of March 22. Alright, we are going to charge or calculate depreciation from 1st of April 2021 to 31st of March 22. Now, how are we going to calculate this? On 1st April 21, the asset had a remaining useful life of 3 years. Remember, on 1st April 2020, the asset had a remaining useful life of 4 years. On 1st April 21, the asset is having a remaining useful life of 3 years. So what we are going to do is the carrying amount of 60 lakhs minus the salvage value, the whole divided by remaining useful life of 3 years. All right, the carrying amount of 60 lakhs, carrying amount on 1st April 21, which is equal to 60 lakhs, less salvage value of 0, the whole divided by remaining useful life, which in this case is 3 years. So we actually recognize a depreciation of 20 lakh rupees. We are recognizing a depreciation of 20 lakh rupees, and this, therefore, the carrying amount on 31st of March 22 is going to be equal to 40 lakh rupees. 60 less 20, which is equal to 40 lakh rupees. All right. So how did we calculate the depreciation for the second year? We took the carrying amount on 1st of April 21. Carrying amount on 1st April 21 is the same as carrying amount on 31st of March 21. 1st April 21 and carrying amount on 31st of March 21 is the same, which is equal to 60 lakhs. On 1st of April 21, the remaining useful life was 3 years. Therefore, depreciation is calculated as carrying amount less salvage value, the whole divided by remaining useful life, and we calculated the depreciation as 20 lakh rupees. Now, if you notice, the depreciation for year 2 is 20 lakhs, whereas the depreciation for year 1 was actually equal to 25 lakh rupees. Depreciation for year 2 was 20, whereas depreciation for year 1 is 25. The reason why the depreciation actually changed is because you recognized an impairment loss in year 1. Because you recognized an impairment loss in year 1, the depreciation has changed prospectively. The depreciation for year 2 has changed because you recognized an impairment loss in year 1, as a result of which the depreciation actually changes. Because when you recognize impairment loss, the carrying amount changes, and therefore the revised carrying amount is depreciated on a prospective basis over its remaining useful life. Hence, the depreciation for year 2 is not the same as that of year 1. That is with regard to carrying amount on 31st of March 22. Now we will be comparing the carrying amount with the recoverable amount on 31st of March 2022. So to calculate the impairment loss on 31st of March 22, what we are going to do is we will be comparing the carrying amount with the recoverable amount. All right. So therefore, impairment loss will be equal to carrying amount less recoverable amount, that is equal to 40 lakhs. Recoverable amount was also equal to 40 lakhs on 31st of March 22. So it's going to be 40 lakhs less 40 lakhs, and therefore there is no impairment loss that is required to be recognized. You have an asset in the balance sheet at 40 lakh rupees. The benefit that you're expected to receive from the asset is also 40 lakh rupees, and therefore there is no impairment loss which is required to be recognized. All right, the asset is appearing at its true worth, and hence there is no impairment loss required to be recognized on 31st of March 2022. Let's now move on to step number 6, which will be calculation of carrying amount on 31st of March 2023. All right, we are now calculating carrying amount on 31st of March 23. Remember, the third year was 31st of March 23. So we are now going to calculate the carrying amount on 31st of March 23 and compare the carrying amount with the recoverable amount to see if there is any impairment loss. Now, how do we calculate the carrying amount on 31st of March 23? We will start with the carrying amount on 31st of March 2022. We will start with the carrying amount on 31st of March 2022, which is equal to rupees 40 lakhs. What we calculated as above, 40 lakhs, that is the carrying amount on 31st of March 2022. We then deduct depreciation from 1st April 22 to 31st of March 23. All right, we are then deducting depreciation for the next financial year, which is 1st of April 2022 to 31st of March 23. All right, how do we calculate the depreciation? We will take the carrying amount on 1st April 22. Carrying amount on 1st April 22 was 40 lakhs less salvage value of 0 divided by the remaining useful life on 1st of April 22. The remaining useful life on 1st April 22 was 2 years. You purchased it on 1st April 2020. 2 years have passed by. So on 1st of April 22, the remaining useful life was 2 years, and therefore you take the denominator as 2. So the carrying amount on 1st April 22 less salvage value, the whole divided by the remaining useful life on 1st of April 22. The remaining useful life on 1st of April 22 was 2 years. Therefore, you have a depreciation of rupees 20 lakhs. And hence your carrying amount now is going to be equal to 20 lakhs on 31st of March 2023. On 31st of March 2023, your carrying amount is equal to 20 lakh rupees. Now let us compare this carrying amount with the recoverable amount. The recoverable amount in this case is actually equal to 28 lakh rupees. If you notice, I am showing an asset in my balance sheet at 20 lakh, but the benefit that I'm going to receive from this asset is 28 lakh rupees. All right. And remember, this is an asset on which impairment loss has been charged in the past. In year one, we recognized an impairment loss of 15 lakhs. And after that, now in year three, what has happened is the recoverable amount is greater than the carrying amount. Probably what would have happened is that we started anticipating some better cash flows from the asset, and therefore the recoverable amount has actually increased or gone greater than the carrying amount. The recoverable amount has gone greater than the carrying amount, and this is a case of reversal of impairment loss. All right, because you recognized an impairment loss in year one. In year one, the carrying amount was 75 lakhs, and you recognized an impairment loss of 15 lakhs because at that point the recoverable amount was equal to 60 lakh rupees. All right, so we recognized an impairment loss of 15 lakh rupees in year one. Now what has happened is the carrying amount has gone down to 20 lakhs and the recoverable amount is actually at 28 lakhs, and therefore what we are actually saying is there is a reversal of impairment loss to the tune of 8 lakh rupees. There's a reversal of impairment loss to the tune of 8 lakh rupees. All right, so in step number 7, I'm writing down the reversal of impairment loss on 31st of March 23. This is equal to carrying amount less recoverable amount, which is equal to 20 lakhs less 28 lakhs, that is equal to negative 8 lakhs. This negative 8 lakhs, the negative is representing the impairment loss reversal. This negative is basically representing impairment loss reversal. Now remember, impairment loss is an expense in the P&L. Impairment loss reversal is a gain in the P&L account. Impairment loss is an expense in the P&L. Impairment loss reversal is a gain in the P&L account. All right, so if I recognize this gain, what I'm basically going to do is I will be correspondingly increasing my asset value. My asset was appearing in the books at 20 lakhs. I will be increasing this by 8 lakhs from 20 to 28. All right, so the carrying amount of the asset after impairment loss reversal will become 28 lakh rupees. From 20, I will be recognizing a gain to make it 28 lakh rupees. All right. So that is basically going to be the result of impairment loss reversal. Therefore, step number 8 will be carrying amount after impairment loss reversal. This is going to be equal to original carrying amount plus impairment loss reversal. That is going to be equal to 20 lakhs plus 8 lakhs, that is equal to rupees 28 lakhs rupees. All right, so carrying amount after impairment loss on 31st of March 2023, this was 31st of March 23. So the carrying amount on 31st of March 23 after recognizing the impairment loss reversal is equal to 28 lakhs. Now I just have a thought. All right, my thought is, let us say if I did not recognize impairment loss here at all, if this impairment loss of 15 lakhs was not at all recognized, I just want to compare what the carrying amount would have been on 31st of March 23. Assuming that on 31st of March 21, I do not recognize impairment loss, I just want to see for the purpose of comparison what the carrying amount on 31st of March 2023 would have been like. All right, so I am writing step number 9. Step 9 as carrying amount on 31st of March 23, assuming that no impairment loss was recognized. Assuming no impairment loss was recognized. I'm only doing it for the sake of comparison. I just want to see what the carrying amount would have been assuming no impairment loss. If there was no impairment loss, I would have had cost of asset on 1st of April 2020 as rupees 100 lakhs. And then I would have recognized depreciation for 3 years. I would be recognizing depreciation for 3 years. From April 2020 to 31st of March 2023, I would be recognizing depreciation for 3 years, which would be calculated as 100, which is cost, less salvage value of 0, the whole divided by total useful life of 4 years. This is giving me the depreciation per annum. I will be multiplying this by 3 to get the depreciation for 3 years. So it would be 25 lakhs multiplied by 3, which is equal to 75 lakhs. And the difference will be 25 lakhs, which would be the carrying amount on 31st of March 2023. All right, so the carrying amount on 31st of March 2023 would have been 25 lakhs if no impairment loss was recognized. All right, if in the first year on 31st of March 21 I did not recognize any impairment loss, then what would have happened is I would have just depreciated the cost on a straight line basis for a period of 3 years, which would be equal to 75 lakhs, and the carrying amount would be equal to 25 lakhs on 31st of March 2023. Whereas the actual carrying amount after impairment loss reversal, I had calculated it as 28 lakhs. Now here comes the twist. Ind AS 36 states that impairment loss reversal is allowed to be recognized as a gain subject to satisfaction of 3 conditions. Impairment loss reversal is allowed to be recognized as a gain subject to satisfaction of 3 conditions. Let us see what those 3 conditions are. So condition number 1 is impairment loss reversal on goodwill is not allowed. Impairment loss reversal on goodwill is not allowed. All right. So you cannot actually recognize an impairment loss reversal on goodwill. Is this condition satisfied in our example? The answer is yes, because we are not reversing impairment loss on goodwill. This was a random asset on which we are actually recognizing the reversal of impairment loss. So have we satisfied condition 1? The answer is yes. The condition 2 is impairment loss reversal should be less than or equal to the impairment loss that was previously recognized. All right, we cannot recognize a reversal which is greater than the original impairment loss itself. Is this condition satisfied in our example? The answer is yes, because I recognized a loss of 15 lakhs in year 1, whereas the reversal, I'm only recognizing it to the tune of 8 lakh rupees. The impairment loss reversal should be less than or equal to, it cannot exceed, it should be less than or equal to, or alternatively speaking, it cannot exceed the impairment loss that was previously recognized. The impairment loss that was previously recognized was 15 lakhs, and the reversal is to the tune of 8 lakhs. So this condition is also satisfied. This condition may not be satisfied in certain cases. Hypothetically, assume, let us say the recoverable amount is actually equal to 45 lakhs. Hypothetically, let's assume that the recoverable amount is equal to 45 lakhs. What would happen is the reversal of impairment loss would be 20 lakhs less 45 lakhs is equal to 25 lakhs. It's actually a reversal of 25 lakhs. Are we allowed to recognize this reversal of 25 lakhs as a gain in the P&L? The answer is no, because Ind AS 36 states that the reversal cannot exceed the original impairment loss. Original impairment loss was 15 lakhs. Therefore, reversal will also be restricted to 15 lakh rupees only. You cannot recognize a gain of 25 lakhs, but your gain in the current year will be restricted to 15 lakh rupees only, which is equal to the impairment loss that was originally recognized. That is with regards to condition number 2. Then the third condition, which is the most important one, is that the carrying amount of the asset after impairment loss reversal, the carrying amount of the asset after impairment loss reversal, which in our case was rupees 28 lakhs. All right, the carrying amount of the asset after impairment loss reversal is equal to 28. We had the asset at 20, we recognized the gain and correspondingly increased the asset from 20 to 28 lakhs. The carrying amount of the asset after impairment loss reversal, it cannot exceed, it should be less than or equal to the carrying amount of the asset that would have existed if no impairment loss had been recognized. All right, so step number 9, I did not really do it for time pass. I actually did it for a purpose, because Ind AS 36 states that after impairment loss recognition, the carrying amount of the asset, it cannot exceed the carrying amount that would have existed on 31st of March 23 had no impairment loss been recognized. All right, the carrying amount in this case after impairment loss reversal is equal to 28 lakhs, but this is greater than the carrying amount that would have existed on 31st of March 23 had no impairment loss been recognized, which is equal to 25 lakhs. All right. So this condition 3 is not satisfied. What does condition 3 say? It says that the carrying amount after impairment loss reversal on 31st of March 23, it cannot exceed the carrying amount that would have hypothetically existed. The carrying amount that would have hypothetically existed had no impairment loss been recognized in year 1. All right. That number is 25 lakhs and carrying amount after reversal is 28 lakhs. So condition number 3 is not satisfied. All right. Condition number 3 is not satisfied, and therefore Ind AS 36 states that the carrying amount should be restricted to 25 lakhs. The carrying amount after impairment loss reversal should be restricted to 25 lakh rupees, and therefore the reversal of impairment loss is going to be permitted only to the extent of 5 lakh rupees. All right, the carrying amount cannot exceed 25 lakhs. So I will be only able to increase my carrying amount from 20 to 25. Although the recoverable amount is 28, because of condition 3, Ind AS 36 prohibits us to increase the carrying amount beyond what it would have originally existed, if there was no impairment loss, and hence we will be able to increase it from 20 to 25 only. Therefore, the reversal of impairment loss is going to be equal to rupees 5 lakhs. Finally, the gain that we can actually recognize in the income statement is going to be only 5 lakh rupees, although your recoverable amount is 28. You're only allowed to recognize a gain of 5 lakh rupees. Therefore, condition number 3 is not satisfied. And hence impairment loss reversal is restricted to 5 lakh rupees only. How did I calculate this 5 lakhs? My current carrying amount is 20 lakhs. The recoverable amount is 28. But what Ind AS 36 is saying is the carrying amount of the asset cannot exceed the carrying amount that would have hypothetically existed if there was no original impairment loss. That carrying amount is 25 lakhs. So I can increase my asset from 20 to 25 and not up to 28. And hence the reversal is only restricted to 5 lakh rupees. And hence Finally, the carrying amount on 31st of March 23 after impairment loss reversal will be 25 lakhs and not 28 lakhs. After impairment loss reversal is equal to rupees 25 lakhs and not equal to rupees 28 lakhs. I can recognize impairment loss reversal only up to 5 lakhs, and therefore the carrying amount will be 25 lakhs and not 28 lakhs. All right. So whatever I did in step number 8, that was only a working and not the final answer. It was done only to compare step number 8 with step number 9. And because the carrying amount after impairment loss reversal as per step 8 is greater than the carrying amount that would have hypothetically existed on the same date, therefore I am restricting the impairment loss reversal to the tune of 5 lakh rupees. We are not recognizing a gain of 8 lakhs, but we are recognizing a gain of 5 lakhs. The journal entry for this will be fixed asset debit 5 lakhs to impairment loss reversal 5 lakhs. Fixed asset debit 5 lakhs to impairment loss reversal 5 lakhs. Let us quickly see the solution of the institute as well. So on 31st of March, On 31st of March 2021, we had carrying amount of 75 lakhs, recoverable amount of 60 lakhs, and therefore impairment loss of 15 lakhs was recognized. 31st of March 22, carrying amount was also 40 lakhs, and therefore there was no impairment loss because carrying amount and recoverable amount were equal. On 31st of March 23, the carrying amount was 20 lakhs, recoverable amount is 28 lakhs. Therefore, the recoverable amount is exceeding the carrying amount by 8 lakh rupees, and hence impairment loss recognized earlier should be reversed. There should be a reversal of impairment loss. However, the reversal of impairment loss should not exceed the carrying amount that would have been determined net of amortization or depreciation had no impairment loss been recognized in prior years. The carrying amount after recognition of impairment loss reversal cannot exceed the carrying amount that would have existed had no impairment loss been recognized in prior years. Therefore, what we are doing is carrying amount on 31st of March 23 had no impairment loss been recognized would have been 25 lakhs. How? 100 less depreciation of 75 lakhs, which is equal to 25. Hence, the reversal of impairment loss of 5 lakhs should be done on 31st of March 2023. We are restricting the reversal to 5 lakh rupees only. All right, with that, we are done with question number 6, end of chapter questions of the ICAI material. Thank you.